It is the exposure to loss or damage that incentivizes us to behave cautiously, to not take risks. So if our exposure is reduced by, say, buying insurance, we are thereby incentivized to take more risks. So if you had to bear the full $100,000 cost of repairing your car, then you're probably less likely to lend it to your newly licensed teenage brother to take it for a joyride. But if insurance is going to cover most of the cost of any damage, and you're only going to be responsible for a tenth of it, then you're more likely to take that risk. This is what is called moral hazard, a situation in which one is insulated from the consequences of a risk and thereby incentivized to take that risk. This is why insurance companies have deductibles and no-claim bonuses. The deductible obligates you to bear the first portion of the cost of any damage. The no-claim bonus gives you an incentive to not make an insurance claim. Both of those are ways that insurance companies use to solve the moral hazard problem. Here's an example of moral hazard in action. Sam Peltzman of the University of Chicago studied driving behavior as states in the United States enacted seatbelt laws. And he came to the conclusion that as seatbelt laws were enacted, and therefore drivers were obligated to wear seatbelts, the number of car accidents increased. Drivers apparently, realizing that their risk of personal injury was reduced, drove less cautiously. There is a temptation for governments to want to bail out large banks and businesses that are threatened with bankruptcy because they are concerned about the wider economic fallout, the loss of large numbers of jobs and the impairment to related industries. This creates a moral hazard problem because if businessmen and entrepreneurs do not face the full consequence of making a risky business decision, full consequence being the loss of their business, if they think that government is going to come and bail them out, then government is encouraging these banks and large companies to make risky business decisions. Moral hazard.